Hey guys, and welcome to today's video. So in today's video, we're going to be discussing an advanced market structure forex strategy that's going to help you find an A plus setups in the forex financial market. So without further ado, let's get right into it. So for you to be able to use this strategy effectively, you must have a basic understanding of market structure. And when we talk about market structure, we're simply referring to a higher high and a higher low formation in a buy trend and a lower high or a lower low formation and a sell trend. Just like you can see on the screen right here on the left side, right here, this is a buy trend, and on the right side, this is a sell trend. So you must have a basic understanding of market structure in this particular formation. So moving forward, now into the strategy, I call it the three gear strategy. In other words, you need three gears or three components or three ideas to make this strategy a profitable one, or to be able to implement this strategy successfully. So you need the three gears to come together. I call it the three gear strategy. So you need to have the three gears in alignment to be able to um, make the most out of this particular strategy. So without wasting so much of our time, let's look at what these three gears are all about. So the first gear is an impulse price move. So the first gear you want to know and see is an impulse price move. The second gear is the willingness of price to retrace or pull back. So after you've seen an impulse price move, which is the first gear, the second gear you want to see is the willingness of price to retrace or pull back. And the third, which is also the last gear, is an essence SMC reversal pattern, which is smart stands for smart money concept reversal pattern. That's all you need to see. So this is what makes up the three gear strategy. So you need these three components, these three ideas to be able to come in alignment to be able to make this strategy effective and be able to utilize it profitably. So moving forward, let's look at an impulse price move. So when we talk about impulse price move, this is what we're looking at. This is what we're expecting. This is the idea that comes to mind. On the left side of the chart, this is a bullish impulse price move, and on the right side of the chart, this is a bearish impulse price move. You can see the way price move impulsively, breaking structure right here to the buy side, and you can see how price move impulsively to the sell side right here, breaking structure right here. So this is what you want to see when it comes to an impulse price move, which is the first gear of our strategy. Now the second gear, which is the willingness of price to retrace or pull back, is this whole sell move right here, which stands for the bearish retracement or pullback back to our area of break of structure. That's after the impulse price move have happened, which the next gear you want to see is a retracement or a pullback to that particular region right there. Now on the right side of the chart, the same concept, you want to see a bullish retracement or pullback back to our break of structure area. So this is the second gear that it must come in alignment for this particular strategy to be very effective. Now the last but not the least is the SMC reversal pattern. So this is the third gear and a very important part of this system, a very important part of this strategy. You want to be able to capitalize on this one very effective, because this is what's going to give you the sniper entries. This is what's going to tell you whether you should start buying so that you don't get ahead of yourself, so you don't enter too early or enter coming in too late. I don't get it now. So this particular reversal pattern, which is the SMC reversal pattern, is what you need, which is the third gear that's going to make it more effective. Now, on the left side of the chart, right here, sorry, yes, on the left side of the chart right here, this is what I call the W pattern, which is the also known as the failure swing. So this low failed to take out this low right here. So this serves as a failure swing. So this is a W pattern, a failure swing, and on the lower part is a liquidity run. So you can see this low took out this low right here. So this is a liquidity run. It, also stands as a W pattern. So the both of them is what you want to be looking out for in a buy trend. When you want to catch a buy move, these are the two patterns you want to be looking out for. One of these must form before you become a buyer in the marketplace. You must see one of these bullish reversal pattern. Now on the right side of the chart is the M pattern. Now the up one here is actually a liquidity run. You can see this high took out this high right here. So this is the M pattern. So you want to see this one form or this one right here, also the M pattern, but this is the failure swing version of it. You can see that this low failed to take out this particular low right here, but this both of them stands for the bearish reversal pattern. So you want to see this third gear, one of these thing form, whether you want to be a buyer or when you want to be a seller. Now, what we have right here on the screen is a complete implementation of the three gear strategy. This is a complete implementation of the three gear strategy. You can see, first of all, we have the first gear, which is the impulse price move, which is now this to the sell side. So the impulse price move tells us the direction we should be focused on. Now this price move is to the sell side, breaking structure right here. So that tells us, okay, now we are bearish. Our bias in the marketplace is to be bearish. Now the next gear we're looking at for is price going to keep pushing without reversing? I don't get now. That's not what we want. We want price to retrace, we want price to pull back, and that's what the second gear is all about. Now we start seeing a willingness for price to retrace, and this is our second gear. That now give us the assurance that we're going to get to the third gear, which is one of the most important part of this particular system. So this willingness of price to retrace right here is the second gear. And the moment this start happening, this is where we want to know how much are we willing to risk in the marketplace, how long are we going to hold our trade, how much pips or stop loss, depending on how you want to get and enter into a trade. So this is during this retracement or pullback is when you start making those decisions on how you're going to manage your trade, the kind of risk management you're going to take, what your psychology is going to be, and the rest. You get. Now the last but not the least, and which is one of the most important part of this gear strategy, is the reversal pattern, the bearish reversal pattern. And you can see right here, this what we have here is the bearish reversal pattern, and this is the failure swing. So this is a particular high. So this high failed to take out this particular high right here. You can see the divergences to the sell side. So you can see that what happened after the M pattern formed, you can see how price sold off aggressively to the sell side right there. So you would have capitalized on this particular setup right here, and this would have been you profiting in the forex financial market. So this is the whole complete gear put together, and you can see how effective it is right here, even showing you from a chart perspective. Now, without wasting much of your time, let's see some chart examples, and let's drive home this idea very quick and fast. So right here on the chart, this is GBP USD on 4-hour time frame. So I'm going to be giving three examples, and we're going to be calling it a day in this particular video. So just to better send home the idea of what we're looking at, this is British pounds USD. So we can see that price has been selling off. So we're going to have crazy impulse price move. So right here, we can see that there's a swing low right here. So if I draw this out in time right there, you can see how we had a sell-off right here. This is sell-off aggressively right here. All of a sudden, on this candle right here, we can see a willingness of price to retrace. And right here, we can see that price tapped it and fell down. This is the benefit of hindsight. But let's say you want to catch or capitalize on this particular move in real time. What you need to do, you need to drop down to a lower time frame, and the time frame I recommend if you're starting on the 4 hours should be the 30 minutes. So you drop down to the 30 minutes and you get to that zone right there. So you can see a willingness of price to pull back, which is the second gear. So price is pulling back, and also they moved into that particular zone right there. And what happened, you can see if the first sell off right there, creating our reversal pattern. Now, what's a reversal pattern can you see that's formed right here? Now, you need to, this way, training your eyes to see these patterns comes to play, which is a very important part of this particular gear strategy right here. What kind particular pattern can you see after this candle has sell off? What particular pattern? I'll give you 2 seconds to think about that. One and two. So this is the M pattern. The M pattern right here. Let me shade that particular area right there. That's an M pattern, which is a liquidity run. The liquidity run M pattern that just formed right here. You can see it's there to the sell side, then to the buy side running liquidity, and then we have another sell-off. So the moment this particular candle closes below that low, here becomes our entry. So we find our entry right there. Now we get an entry here. What do? We enter right here, place our stop loss above that high. So from this candle to this place, our stop loss would be around 20 pips. And if we hold all the way to this sell-off, that will be about 77 pips right there. So that will be based on chart, that will be 227 pips for stop loss. Then for our take profits, that will be 766 or 778 pips for take profits. So that will be a 1 to 3 risk to reward ratio right there. So you can see how effective this three gear strategy is. So that's one example out of the way. So let me clear the chart and look for another example for us. So we're going to go back to the 4 hours. So I recommend starting this on the 4 hours. So let's look at right here. We can see the price also sold off here, and we can see an active low here. So let's draw that out in time and see how price reacted in this particular region right here. And I believe here is going to give us a kind of variation, which I would like to also talk about here in this video to strengthen the idea. So we can see going forward right here, we saw an impulse move out of this particular lows right here, and there are a series of lows right here. So we had an impulse move out of that particular area right there. So most of the times, once you see the 4 hours candle close like this can also act as an impulse price move also, especially if you're a day trader and you want to catch intraday price action. So this can serve as a impulse price move the moment this 4 hours candle close. So thank God that this variation is actually showing right here, because I believe a lot of you want to catch setups like this. So what you want to do is you want to drop down to the 30 minutes like as I recommended. You want to drop to the 30 minutes and you want to wait. What you're waiting for is the third part of the gear. Now, the third part of the gear is a willingness of price to what? To pull back or retrace. So the moment the candle closes here on the 4 hours, you want to see a willingness to retrace. You can start seeing that willingness to retrace. This is all an intraday price action for those of you that want to be day traders. And this is a willingness to retrace. And what's happened? A retrace all the way, filling this particular void. If you understand um, smart money concepts, you understand areas of imbalances. These are an imbalance that price came right here to fill. And after price has filled in that imbalance, what can you see? You can see a weak rejection right there. So this is an entry signal where you can start entering. Why? Because we now have our reversal pattern. Now it has not formed fully, but this is where I talk about training your eyes to see it even before it happens. Now I can see this a high. This is a low to that area. This is a high, failing to take out the previous high. And we can start seeing a rejection around here. So let's say we hold it down till it breaks this low right there. This is where most of us want to enter. Let me zoom that out properly. So this is where most of us want to enter when this low has been taken out. And this is where I recommend for you to enter. But I'm actually showing you here to start training your eyes for sniper entries. Once you start trusting this particular pattern, you can start catching from this high right here. But for the sake of those of you starting this out, start looking out to enter once price has cleared out the low and has formed the pattern completely. So this will be your entry right here. So what you can do is you can enter on this particular candle right here. Either put your stops here above this high right here, or you can put your stops above the body because of this particular candle. This is an order block that's formed here on the 30 minutes. So one of these areas would be your stop loss right here. If I was trading, I'll put mine here. So that'll be 55 pips, and I'll be looking to catch 222 pips to the sell side. So that'll be a 1 to 4 risk to reward. But for you watching this video that is starting this particular concept for the first time, I recommend you put your stop loss above here. So that'll be 269, and you'll be catching 227. So that'll be a not actually a good risk to reward, but that will actually be a good trade overall. good. But I actually love that we saw this particular kind of example for intraday price action, and because a lot of this is going to occur every single day, and you don't want to be sitting on your hands and doing nothing and be like, I can't find it, I can't find this setup for me. You know what I'm saying? So this is how you go in, look for it. You train your eyes to see the setup form, and I'm very glad for this particular example right here, because you can see the way I was able to zoom in and be able to see it even when it was not obvious on the 4 hours. So without further ado, let's look at one more example rather, and it's going to be a bullish example because we've made two bearish examples right here. So let's look for a bullish trend. So far the market have been in a bearish trend, so okay, I think this is a bullish move here. So let's see if we can find something right there. So on the 4 hours right here, I can see a significant high here. Good. So this is a high right there. So this whole move to the buy side is an impulse price move. So what we want to see after an impulse price move, the second guess was a willingness of price to pull back or retrace. And that's the next thing we want to see. So at this point, we want to drop down to the 30 minutes to start looking for that willingness of price to retrace. Right here, this is what we are. So I'm going to zoom in back again for us to get that clearly. So this is what we have right here. So the moment the 4 hour candle close around this particular region right here, then we started seeing a willingness of price to do what? To retrace back to where that particular zone right there. And you can see the moment it tapped on that zone, it started bouncing off. So now we are looking for what the next gear. Now the third gear we're looking for what? A W pattern. Mind you, for the two sell examples I gave, we looked for M pattern, which is for sell. Now for a bullish one, we're looking for the W pattern. For those of you that is still confused about the M and W pattern, you can watch this video where I spoke about the third gear of the strategy and you understand that better. So all we're looking for to form here is the W pattern. So we are observing price at this particular area to see what is going to form, and all we're looking for is a W pattern. And now if we look clearly, we can see price went here, um, price went higher there, price went lower here, and price went higher right there. So this is a W pattern. Now, what particular W pattern is this? This is actually a failure swing W pattern. So you can actually enter right here and put your stops below this low right here. But you can see moving forward in price came down and wicked through that low. So most of the times, based on your own decision and trading plan, you can decide to put it here. When you are taking out, you can re-enter, or you can decide to put it at a safer region below this low right there. So it's up to you. And the reason why we had this week through to the sell side is because we are about to enter into the London session. And mind you, this is GBP USD. So that's another thing you want to factor into price. You want to factor in the trading session of that particular pair when looking for the W pattern. You know what I'm trying to say? And the British pound respects the London session very much. So you can see that once price took us out on this first entry right here, if we place our stop loss on a tight level right there, what we're going to wait for is to see the reaction of price at that level. You can see the weak rejection right there. That can be a signal for entry if you're very confident. But if you're not confident enough, you can wait for a bullish candle to arise. And when a bullish candle arises, what happened? It created another W pattern for us. If I am to show that, that will be here. That will be, we had a W pattern here. And this move here permits me. So that's a W pattern, but now this is a liquidity run W pattern. So we saw this low. Let me use the bring the crosshair. We saw this particular low, take out this particular low right here. So we have a W pattern right here. So you can enter on this particular candle at the close of that candle, which is the London session, and place your stops below this particular low. So you can see how we're able to frame these setups with the three gear strategy. So you can see if you entered around this region, you entered here and you place your stop loss here with good risk management. Let's say you got knocked out and you re-entered right here again, because now the impulse move has given you a bias. You see the beautiful thing about this trade. So you are very convinced that you are in a buy trend. So what you do is that once you see this bullish candle comes, you now know, okay, you made a mistake. You didn't enter at the right time, or it's just part of the part of the play of the market. The market will always do what it wants. So no hard feelings. What will happen is, as long as you see the setup come again and it now aligns properly with the London session, no problem, you re-enter. Is that not so? As long as you apply good risk management the first time, not over leveraging. What happened? You enter here, placing your stop here, and holding up to that area. You're going to recover the loss you had right here. So if you put here, your stop loss will be 237. You hold to this region, that'll be 522. That's another 1 to 2 weeks to reward. So you're going to recover the loss you had before and make even an extra percent on this particular new trade again. So you see how very effective this particular trade gear strategy is. For it to be more profitable for you as a trader, you need to go in and refine this particular strategy to yourself. You need to, and what I mean by refining it is not adding extra things and confusing or complicating the strategy. It's actually taking it and practicing it over a series of back tests to be able to drive home the idea in your mind. You can just take these little components and ideas I shared here in this particular video, and you're very good to go. So if you find value in today's video, hit the like button, hit the subscribe button, and see you in future videos. Peace.